Friday, 10/14, 2011. Halloween is coming. At a $44.86 gap on Apple. No, I'm just kidding. It's really Google. Apple, though, on the other hand, has a 9.48 gap in Priceline 6.5 and Baidu 563. Amazon, Green Mountain Coffee, and The Bowl, TQQ, and even little Netflix in there, and Win, Adobe. So we have a fairly decent gap, and what has the gap really contributed to? It would be contributed to these blowout earnings. And we are running here on a $10 gap on Apple back toward its highs after getting slammed down to $360. We are starting day 9 of this fall rally, autumn, fall. This is the time of year where stocks are supposed to do extremely well, and they will for a while, as the short interest, when people say, oh, well, we're up a certain amount of percent-wise, 10%, 8%, the indexes and this and that. The thing of it is, though, the public doesn't understand, MMTs understand, that when we were falling and the big short sellers were on this market, just as many as 9 days ago. Today's the 9th day from that home plate buying opportunity in the S&P at 1075, and we ripped another rally off the bottom, and this one's a greater rally off the bottom than any of the other, than the first 52-week low. And 52-week lows are to be traded because the shorts stay too long in the market. And as you gap up and you make these moves, the short sellers have to buy to cover. Because the more the market goes up, the more money that they lose. So the mechanical processes and the pricing control mechanisms within the futures, you can see that earnings is a good place to be. Things happen when a bellwether blows out the number, and it's the first time of late that we had this same trade a quarter ago, and they came back another quarter. And Wall Street, the last time that we had these great gaps and we ran up to $642, we went tumbling down to $473. And the problem, what we're going to be monitoring is, where does Wall Street come to the conclusion that Google is going to keep making money? And that all of the other incidences and all of the things and the kind of negative spins that they put on it, well, they seem to keep delivering. It's been an underperforming asset, equity, or publicly traded company for a number of months. It's underperformed. It outperforms on its earnings and it makes a lot of money, but it has not outperformed the market like other names had did in 2010 and early 2011 up to the summer period. So we will be monitoring it carefully as we move forward. It will have its trading ranges just as it always does. It's just that the only thing that changes is the number. Now we'll be watching to see how much Wall Street is going to sell into it, or how much are they going to come and buy it. Because when the bull gets superly ramped up, you get this great upside volatility, which is wonderful, as they always are and always have been. And for as long as they want to go, well, we let them keep going. So we're going to be looking at some of these gaps today. Once again, a lot of them, like the price line gaps and whatnot, they're related to this earnings right here. Okay. Now, let's say on the other hand, Google would have missed. You would have the opposite. You'd have big gap down in the market. So when the bellwethers report during the earnings season, and they do well, then you get what we call sector-related sympathy gaps. And sympathy gaps are that they gap up automatically in the futures market, right along with the good name here. And the thing about it is that we can clearly see that the opening bell will have either an immediate sell to it, and you'll see it right away. And the thing about it is, we are starting 9 days of our rally, the ninth day rally. And the S&P has to close above 1228 for the bull move. And until it does, it will be in a trading range. If we can get above 1228 on the S&P, as we have said, we will continue to move higher up toward our 1248 handle. And the upside volatility is just as great as downside volatility. It makes a great market to have both volatilities because you get these great upside volatility moves when they come, but then you get the great downside volatility. That's what really makes a market and keeps people like us in business, because we get both moves, both debits. We get both sides of the coin. And the coin right now is a 9-day bull run. And we have initially and officially started the earnings with Google. And we've got a positive tone. But this is a company that delivers. A lot of companies have come out and already given warnings because of this nasty slowdown they see around the world. Okay? This is a time stocks will rally up to as far as they can go from being beaten down in calendar 2011. S&P got to 1075. That was a whooping and a beating for the bull. And the bear was rejoicing. Now the bull is on top for 9 days. And we will go up higher to key levels of resistance. And then we'll start initiating the correct trades at that point in time. Just remember, MMTs, that the pullbacks are to be bought. There is no sell-through. So therefore, you must immediately take your debit profit and get net long right away. And it's been that way, and it was that way yesterday again. And now the super gap is, how do I sell into it? And what are they going to do? We'll know, because the gap is to sell, then it pulls back to support, and then it bounces up and challenges those very same highs where they sell from. So we'll see if something like Priceline, that's gapping up in the last print is 503, we'll see if it holds that 497, 498 area and wants to pop up and make another all-time high. And how they can ride off of how the bull can get that move higher, we'll watch it. It's still $49 off its original high. And stocks mathematically go down a certain way, and they mathematically go up a certain way. So let's get ready to rumble. We got this Apple trade. That too, on the opening bell, will go up and make a high, and it too will have to pull back and get sold down a little bit. So the shorts are okay, but they're diminishing patterns. They're not all day. Diminishing pattern to sell short for the pullback and then get net long off the support level is the trade management. Sell the gap, buy the rip, and keep doing it. So that, once again, this is day 9 of the rally going into a weekend. Do they want to own equities, the bull, going into the weekend with the G20 meeting in play?